What is up, and welcome to today's video. In today's video, I'm going to solve a problem for you that I've seen so many traders have. I've had so many questions about, and that is, how do I avoid entering a trade at the end of a trend and then getting stopped out? So for example, take a look at the chart on the screen. What if you are looking at this market as in a trend? It is definitely in a trend. You can see that by looking at it. And the market's pushing down, breaks support, and you go, okay, we now have a trending market. I want to sell this market, and you sell the market at previous support because that should become resistance. So you go ahead and put a limit order at previous support to sell, expecting trend continuation in this market to push down. You put a stop loss above previous resistance, pretty good place for a stop. And then you're super excited because you think you're going to win the trade, but the market does something like this and stops you out and then reverses and continues higher. The question is there a way to avoid this situation? And the answer to that is no, not completely. There's no way to never get caught in a situation like this, but there is a way to minimize the amount of times you get caught in this type of situation. And what I'm going to show you today is two ways that I use to minimize the amount of times I am caught in situations like this. So what I'm going to teach you is how to know when the market's going to reverse trend, and also a way you can use to actually capture more profits when the market is trending, a way you can get out of the market based on the fact that you know the market may soon reverse. So if that sounds interesting, make sure you click that subscribe button below the video to the right hand side. Click that like button for me, follow us on the socials, and I'll be right back with today's content after the intro and disclaimer. See you soon. So, what is the first way of avoiding reversing situations in the market when you're trying to trade trend continuation? That's what we're talking about right now. Way number one is so simple that I can explain it to you in one sentence, but I'm also going to go through the market and actually show you an example of this. And this one way I'm going to show you now would have completely avoided the loss that we looked at before the intro and disclaimer. It's, again, so simple I can explain it in a sentence. Avoid trading trend continuation trades when the market touches a previous level of daily structure. So that was the very simple way of explaining it. What I'm going to do now is show you a very nice example of how that would have kept you out of losing a Euro Aussie trade trying to trade trend continuation when the market's bouncing off of a level of support. We're trading in the downward direction in this case, bearish. So let's go ahead and grab our market replay tool. And for example's sake, let's say you are trading pullback strategies on a 4-hour time frame. You're waiting for a pullback and a shooting star candle. Don't go out and trade this strategy. You can go out and test it and see if it works out for you. I've not tested it. I'm just using this as a very simple example. But what I would do first, if I looked right here at the Euro Aussie and I saw that this market had just put in a nice 1, 2, 3 move, I go, okay, 1, 2, 3. We have impulsive move followed by pullback followed by another impulsive move. We're now in a bearish trend. With that being the case, I want to trade bearish, trend continuation trades. But the first thing I would do once I see this market is in a bearish trend is I would jump out from the 4-hour to a daily chart. I would look left on this daily chart and I would go, okay, since we've just broken below our previous support, now I'm waiting to see where the next level of support is, because I don't want to trade if the market touches that in the bearish direction. As you can see, right here is the next level of support. I'm just looking at the most previous level of support. So this is the most previous level of support. That being the case, I would place a horizontal line there. I would jump back over to the 4-hour chart. Remember our strategy, waiting for pullbacks and a shooting star candle. So at this point, we're going to move the chart forward and we get a pullback. Shooting star candle, that red candle right there would have been our entry. You can place stops and targets however you would like to. Let's say above the entry candle. We move forward. We don't get stopped out. The market eventually continues down. Now, we're waiting for the same exact thing again because we have not hit our horizontal line. We haven't hit that daily level of structure support yet. So we're still waiting on our strategy, which for a very simple example in this case is a pullback and a shooting star candle. And we pull back up. Eventually get a shooting star candle right there, that red candle. So now we're short with a stop above that candle. Don't get stopped out. The market continues in trend. Oh, what about now? Now we've hit that black line that we looked at on the daily chart. Okay, so in this case, the market has just hit a previously tested major level of structure support. With that being the case, do you want to trade trend continuation on the Euro Aussie? I hope your answer was no. You don't want to be trading trend continuation when the market has just hit a daily level of structure of any kind. So to help you really understand this, if this market on the 4-hour chart would not have, we've already seen it. We know it breaks up and start to trend to the upside. If it had not done that and continued to push down and broke below this level, what do you think I would do? I would be then looking left after the break and close below this level. I would be looking left and I would ask myself, looking left, where's the next most previous levels of structure support that have been tested? So if we look left, the levels I would look at right here is a level of support, and right here is a major level of support. Those two levels are the levels I would avoid trading trend continuation to the downside at. So if this market pushed down, I would trade smaller time frame, 1 hour, 15 minute, maybe even 4 hour, depending on what kind of targets I could get down to 1.582. But I would trade trend continuation only until we hit this level. Once we hit this level, I want to see how the market reacts. If the market starts heading higher, obviously the downtrend is over based on that analysis. If the market breaks through that level and continues lower, then I would trade all the way down to my next level of support. I would continue trading. If we did this and we had this situation, I would trade little breakout patterns or pullback patterns, whatever it is, all the way down to 1.5702. And this, again, there's no way to never be caught in a situation where the market is reversing. You will be caught in that every now and then, but this is one of the ways that will minimize the amount of times that you get caught in a market reversing while you're trying to trade trend continuation. And it's so simple, it will take you less than 5 minutes to look at a higher time frame, like a daily chart, whenever you're looking for your trend continuation trades on smaller time frames, and ask yourself, where's the most previous level of structure that I need to be looking at to avoid trend continuation? That's all you have to do for way number one. And this will actually increase your accuracy on trend continuation trading a dramatic amount. It's something that really helped me increase the accuracy of my own personal trend continuation trades. So that's way number one. Now let's jump into way number two. Okay, welcome to part number two. Hopefully that first part was really helpful to you. If it was, make sure to smash that like button for me and leave me a comment. Also, if you found that to be interesting, we actually have a link below for a free reversal strategy that uses the same exact concept you just learned to actually capture reversals in the market. That's going to be free for the next 7 days only. So if you want to check that out, the link is in the description. Just click that, head over there, put in your email address, and I will send you the full course via email. Otherwise, we're going to jump into the second part. So what's the second way to avoid trend continuation whenever the market's likely to reverse? And also, this is one of my favorite ways to take targets on trend continuation trades. What I'm going to do first is head up to a whiteboard and show you this extremely simple process. Again, this is also extremely simple. What I'm looking for is, let's say the market's in an uptrend, and I decide I'm going to trade trend continuation based off a bounce off the previous level of structure resistance. I get my entry reason there, and I place the trade. If I'm going to trade trend continuation, trend following, then I'm going to continue to hold that position until I think the market's going to reverse. With that being the case, what I normally do is move my stop loss up to previous levels of support as we break through resistance levels. So after this break, this would be the support level. I would continue to do that after every break, move my stop loss to the previous support level to below it. And what I would be waiting on is again, moving the stop loss here, would be a situation where the market is pushing up, but then creates a 1, 2, 3 move to the downside. And my rules for this is I need 2 candles coming down, a 2 candle pullback right here, and then the break below and close below the low of that pullback is where I will take my position off. So if we had a candle that looked like this and closed below the previous level on my 1, 2, 3 move, then I would take targets off here instead of waiting on my trail stop to be hit. So it saves me this many pips. It gets me this many more pips, however many this would be, in this specific situation. And now I've been able to take off targets at a higher point, giving me more profits. So this is a way to actually capture more profits in a trend continuation, trend following type trade. If you're already in the trade and you want to take profits off a little bit earlier, still giving yourself a reason to actually exit the trade and putting you in a good position to know when the market's going to reverse. Because a situation where a market's heading higher and then you see something like this, This right here is a situation where the market is likely to reverse. This 1, 2, 3 move to the downside puts us in something called a bearish rotation. In an uptrend and a downtrend, this is called a bullish rotation. What I'm gonna do is take you to a chart so you can better understand this, give you a better example of how all of this works. So in this case, right here on the Aussie New Zealand, we have a market that's pushing up. Let's say we start breaking resistance levels here. We have our pullback and we have another push up breaking resistance. And this pullback and push up could go either way. It could go like this. Let's say it goes like that. And I say, I want to trade when the market gets back down to the previous resistance level. I'm going to have a limit order there and I'm going to be ready to take this market up for trend following. So the market pushes down, hits my limit order right here. That being the case, I would go ahead, place my order here, and I would have a stop loss below the previous support level. And then as the market pushed forward, as we break above resistance levels, I would then move my stop loss up to follow that trend. So if the market does something like this, once we break this resistance level, I move my stop loss up. And when we break this resistance level, which we do very soon, like right here, once we break that resistance level, I would move my stop loss up again. So there's my stop loss. And then we have another level of resistance right here that was broken. So I would move my stop loss up to this support level right here. And with this being the case, here's my stop loss for now. What I'm waiting on is the market to do a 1, 2, 3 move. Remember, 2 candles down at least, followed by at least 2 candles back up. And the candle that closes below the low of my pullback is where I'm going to exit the trade in a trend following situation. So as we do that, you can see that right here, this little red candle actually does close below my previous level of support in my 1, 2, 3 move. So my target would have been taken right here. And you'll see what this does as the market pushes down. It would have stopped me out on trail stops, but instead I captured this many more pips by having this very specific way of noticing when the market is likely to reverse trend. So this is one of the ways, again, that I like to use in order to take profits, but at the same time, this also tells me that I don't want to look for trend continuation trades if the market has just put in this 1, 2, 3 move. So that avoids that. And let's just check this with an actual position tool. This would have been our position. We would have had a stop loss initially below this support level over here, and our initial target, we really don't have a target. We're using trail stops. So we go from being stopped out at about a 1-to-1 risk reward to a 1.5 risk reward, adding a 0.5 margin to our risk reward just by taking targets off in this specific way using this 1, 2, 3 pattern. And again, that's one of the ways that I use in order to avoid taking trend continuation trades. Once I see that 1, 2, 3 move, I may say, no, I'm not trading in trend continuation style anymore based on that 1, 2, 3 move. So hopefully that's been valuable to you. Take these and test them out in the markets and see if they actually give you an edge. Do it yourself. Don't just take my word for it. This is something I do use in my trading, and it does help me avoid situations where I shouldn't be trading with the trend, in situations where I have a 1, 2, 3 move, or situations where I'm hitting a daily level of structure. But it's definitely something you have to go test. Everything I show you in these videos is something that I know is testable and verifiable, and the reason for that is because you need to do that testing. So be sure to do that. If you did enjoy the video, again, click that like button. Get your hands on that free training listed below. It's a free reversal strategy I'm going to have open for the next 7 days. If you're interested in some more advanced training material on Forex trading, then we do have the EAP training program, our flagship program, and the Pro Trader Report listed below. In the Pro Trader Report, I send you my top 3 to 5 trading zones that I'm looking at for that week. And in the EAP, I teach you all the strategies that I use in my own personal trading. And these are the same strategies that have helped hundreds of traders already on their path to becoming profitable and consistent and professional and independent traders. I'll throw some of their comments on the screen and stay past the outro to see a few more of their comments as well. I wish you all the best of luck on all your future trades. I hope you have a great rest of your week, and I will talk to you in the next video. See you soon.
Fearless.